Hello everyone, Paul here from the Penny Academy. We have always been talking about downtrend, uptrend, retracements, continuations, and the rest. But there's one type of price movement that we have never spoken about, right? We have never spoken about a ranging market. Now, there are two types of ranges. The range can happen in a structured time frame. Now, by structured time frame, we do have daily, we have weekly, right? You can choose any other time frame for your structured time frame, but that's done we commonly use here if you've been following us. You can choose, if you have your own different structured time frame, it is okay. I'm meaning the structured time frame. You can use daily, you can use H4, some people use H1 for their structured time frames, right? Which is okay, right? It's as long as it works for you. Now, we have those two. We have that first type, which is a range that's happening in a structured time frame. And then we have a range that is happening in an entry time frame. Now, for us, our entry time frames are H4 and H1. So those are the ones that we consider as entry time frames. But you can have yours. Some people have H1, H4, minute 30, minute 15, minute 5. Some people even have seconds, right? So those are the two types of ranges that you can see happening in the market. Now, the purposes depend on the time frame. For example, if you have a range happening in a structured time frame, it means that you're going to treat it for the purpose of a structure. If you have it happening in an entry time frame, you're going to treat it for the purposes of an entry. I'm going to explain all that practically. Now, the example I'm going to use is gold. Now, in the previous video, the breakdown that we just did, I spoke about gold, and I told you guys that we wanted gold to come into this area. Let me just change the color into this area here, and I'll not be interested unless it changes trend here to come back down, or for me to hold, I needed it to break above this level, then I'll be waiting for retracement to target the high, or for it to break below here, then I'll be waiting for retracement to come back below. Now, I'm going to explain why I made those statements, because this market was giving us a range in a structure time frame. Are we together? So let me just clear everything so that you can understand why I made those statements. Let me just remove everything. So our chart is now clean. Now, if you're to start from the monthly time frame, you can clearly observe that the price, this is the highest point that the price had ever made. Use this, I think 4 months back. So the price made this high, right? And then the candle closed here. Now, if you're to follow going back to the smaller time frames like weekly, our structure time frames weekly and monthly, you can clearly see we had an impulse, meaning that this is a fib area. If you're to draw your fib, you draw your fib from down here where the impulse started to the highest point. You realize that those who know how we use Fibonacci, there's a video on it, you can just watch it. You can see this is our Fibonacci tracement area, 38, 50, 60. As long as 60 is not broken, it means that we are still continuing higher, right? So, and then when you go down to the daily structure time frame, you can clearly observe we talked about this level a number of times. You guys call it an order block. I call it just a foreign body candle, which is in a place that's not supposed to be there. You can see this, right? So what happened is that the price went and created this high, right? And then came back, tapped this area and failed to break below, right? Because we have levels that are not tested below, but we have a foreign body area or what we call an order block, and it's holding price. This level is so strong because it's also aligning with the weekly level. So now let's first go back slightly before we continue. We have created our resistance, we have created our support, right? I know some of you say support and resistance don't work, but whatever strategy you're using, you guys call them strategies, involve support and resistance. I don't know actually what you guys be meaning that they don't work. Everything that you're doing in the market involves these two things, right? So I don't mind what I've just mentioned. So let's just take a step backwards and we define range market, right? Now, a ranging market is when the market is creating equal highs and equal lows, right? Now, since this is a structured time frame, the daily time frame, we're going to be using the structure to take a trade. Actually, there's a setup that the setups I've been sharing. I'm going to explain to you how they came about, right? So when you're making, we first make a high and then you make a low. The moment you see the price is failing to break out this high and it changes trend. Now, this is when the importance of the time frame comes in the structure. And you know it's trending upwards there. When it breaks the structure, you know it's supposed to come back to this low here. Again, you follow up with the way it's moving downwards. When it breaks structure, you know it's supposed to come back to this high here until it either breaks upwards or it breaks downwards. You getting it? This is what we call a range market. When the price is making equal highs, right, and equal lows until it breaks below. You can utilize these opportunities here. Actually, I prefer when the market is ranging in a structured time frame so that when I go to my entry time frame, actually it gives me a good risk to reward ratio, right? So gold first created for us this high here and then came and created a low by failing to break this. So the moment it did that, what we're waiting for, we're just waiting for a change in structure so that we can push higher. Now, I'll show you where the market changed structure from. Allow me to replay, because today we are learning, right? Allow me to replay. So what happened is, when the market came and tapped down here, right? So it means that we have made here a low, right? The market is now pushing higher. So it's coming to retest these levels here because it broke them down. And also when we break more than one turning point, this is one turning point, the second one, the third one, this becomes an impulse. So you can draw your fib level there, right? So if you draw your fib level, you realize that the price has to at least make for us a pushback down. So I'll put my fib level. You can see we're tapping that our level there. So when you were to play, you can see the Fibonacci retracement level push the price back down, but it's failing to take out this low here. Now we count this as one low. So the market created a high. This is a low because the market has not created a new high or what. So this is still the same movement, right? So it is a high. This is a low. So the market created, this is one, we count it as one low. Now what we're interested in here is the market doing what? Changing structure. So I'm just going to mark the last turning point the price made was this one here, right? So we're interested when the moment price breaks above this area here. Let me just adjust it very well. The moment price breaks above this area here, actually we should have used, let me just use a line. Excuse me for that. Let me just use a line. I'm just going to turn it to black. So the moment the price breaks above here, it means that it comes back and retests because this is a low, lower high, low, want the market to react. So this was a false breakout. The price came back and reacted and created double bottoms. So the moment it breaks above, it means we have changed the structure. Now, for example, from here, we know that I'm supposed to only look for buys until again, we take out the high. Because another aspect you have to check out is that when the price was coming down here, did it retest everything? For example, we had an impulse correction. We trended and changed structure here, like I've showed you guys. Now, we have a threat here that the market did not test. So if you're to buy, make sure that this is your first target. The moment we break above here, we're targeting here. Now, go back and type into our channel, our YouTube channel. Just type in gold or XAUUSD. You realize that also there's a time whereby we're saying that we marked a level here and we wanted the price to break above. Then we target these levels up here or here. Just check. I'm just giving you reasons why what I base on to do those breakdowns, right? So because sometimes to make the video short, we don't want to speak everything. The video will be so long and our editing is not for professionals. We're just traders. It may be boring for you guys, right? So if you're to play now, you'll notice that from here, the price moved higher, right? It came back to tap this. Now, what we observe a high, we observe a low. So we have said that as the market is pushing higher, right, we want to see how is the price moving. For example, we saw that the price, with the moment it broke above it, changed trend. So it made a higher low, higher high, higher low, testing properly. Higher high, higher low, testing properly, higher high. So here, in this case, the moment we break below this area here, it means that we are bearish. Now, since everything when we're pushing up has been tested, we need now to target the low. Check again, type in gold. You will see that I said our target is this level. When the market was retesting, we said we are looking for a sell to target this bottom here because everything was tested. All these things, we have done breakdowns on them. I'm just trying to show you how you can identify that now we're in a range. Now, for example, in this case, the market has failed to break that level. So we have equal highs. So we need another equal bottom. So this was an obvious reason for me to look for a selling opportunity. So in this case, someone can say that, okay, since I've taken out this level, I'll be waiting for a retracement here. Then I look for my trade to target this bottom here. Now, the moment again touches this bottom, we shall utilize this movement downwards here to look for our push higher into this level. But we have to test every level here. As we're pushing up, we need to test all the levels. That's why you see in the immediate last video, just the immediate one, not very old behind, the immediate gold analysis we did, the recent video. You can check the recent video of the breakdowns. I was speaking about a level that is not tested in H4 that had a false breakout. Why was I targeting that? Because when I did market first target and react, if that changed trend, then we'll be targeting back the bottom, like we said, or it could even push the price to break below. But the moment it breaks above, then we react on it. We know that now since we've broken above, we're again targeting the equal highs. Now, it means that now we have equal low. Sorry, we have a low, we have a high, equal high. So meaning that now we want to create an equal low again. So we can repeat this until we break out. Remember the characteristic of a ranging market. We have said we need equal high and equal lows, equal highs and equal lows. So let's see if the market can give us that. But of course, this has already happened. Let me not use the word let's see. This has already happened. We're just going to see in the current movement of gold. So the same thing happens, right? So the market again took a bit of time to, it first reacted here and consolidated a bit. The same principle, the market, you can see here, you use the market phases. We talked about phases. The market first rallied, then went into a phase and then finished the move. Because here we know that we need to come and create equal lows. So in this case, we have equal highs. We have a high there, equal high. We have a low here. Now we have an equal low. Now you can see the market has created a low, lower high, low, lower high. So again, the same process. The moment the market breaks above this level here, we have a level here. The moment we react to it and we break, you can clearly see the same thing the market did here. The market came, reacted, and we broke above. So again, what do we see? We have a high, higher low. So again, we have broken. The market has to retest this level, and then we can push. But now we went further into H4 to check untested levels. So that since we are trading inside the range, we are going to be using the untested levels. Just like I mentioned here, this level was, this one here was untested. So it would be your first target, right? That's why you see the market reacted. The same thing here. We have now here in the bigger time frame shows every level is tested. So automatically we're targeting this high, right? So what are we going to do? You're supposed to check into H4 and see which levels are not tested. When I go to H4, you clearly observe that these are the false breakouts that I was talking about in H4. Let me just adjust it well. So we had where I'm putting the black lines, where you see the black lines, we have this level. We have this level. If you check the previous video, I mentioned these levels very well. So if you adjust, these are the levels you're supposed to be using as your targets, right? But remember, in the bigger time frame, we have already changed the structure. Since we have changed the structure by making a low, lower high, then we break above, it means now we're looking for retracement into this area, and then we can take a buy. So if you're to remember, I told you guys that we're looking for buying opportunities until we come back and test this area here. If you're to check, add an arrow here and also an arrow to this area like this. These are the levels that wanted price to test, right? So when you just go back to the structure time frame, you can see where the black lines are, and this is what gold has been doing this week. So currently, we reacted a bit to this level, and we have broken above this area. And I mentioned that the moment the price breaks above this area here, I'll be looking for a weak retest. But again, what do we have in mind? We have a ranging market. So we have this high, we have this low. We have this high, we have this low. The same thing created double bottom. Also here we have a double bottom. So what do we want? What do we see? The market was supposed to come and retest this area, but of course went back a little bit down, creating a level that is not tested here. So that's why you see the market broke above, came back down, and we expected price would reach here, react a bit to come and test here before continuing. That wasn't the case. So now we have broken all these levels and we have closed above the area I spoke about. So what we want to see the week, as the week is coming up, the new week is start coming up, we want to see a week retracement here, because we know exactly that the market has to come back and create another high. Are we together? So we're still in a range until the market breaks out. This is how you can utilize ranging markets. Some people in a structured time frame, in a small time frame, using it just for entries. But I'm so much speaking about the structure time frame because we get structure as our reason to trade. Without structure, you should not take trades, right? Maybe in the next videos, I'll talk about the ranges in the entry time frames, but those ones mostly use phases, right? The market rallies, then goes into a phase. I spoke about phases, market phases. Just type in market phases. You'll be able to understand them in depth, right? So this is how you treat phases, especially the ones in structured time frame. If you've been noticing gold has been in a range, and these reasons I gave them to you, but I'd not explained to you what I'm basing on exactly to come up with the analysis I've been sharing with you guys. So now I hope those who trade gold, this is very, very clear to you. You can also use it for, you can check the same thing. If you have other scenarios that you want me to look at and then explain the same thing to you, we implement them. Remember, trading is not just about words. You have to implement them. You have to backtest. You have to practice. So check the links to our social media, Telegram, Instagram. Do not just go and search. Use the links in the description so that you do not follow other people, right? Because we do not ask for money, no investment, no what. We don't even advertise for classes and the rest. We don't have discounts. We don't sell robots indicators. So kindly just check those social media links. In case you have other pairs, commodities, indices that you think are in a range that is confusing you, kindly just inbox, or you can use Telegram. The link is in the description so that we can go through it. We explain it more. for you to understand, right? And you go and practice. Do not just take our word as final. You can also backtest it. If it's not working for you, you can leave. Maybe our method is not the best for you, right? But if we are very sure of what we are sharing with you guys, not just that we expect favors back from you. For those who have been following us for the 2 to 3 years we have been public, at least you would be witnesses. So if you have any questions or anything confusing you, any topic that you want us to go over that could help you, leave in the comment section. But also do not request for topics that are not in our style. Now, for example, there are some certain styles you guys request us for, well, that is not part of our style. So if you requested for a topic and you're taking long to see a video on it, it means that it's not part of our trading style, right? And we are not here to create content. Just we put for you videos that align with exactly how we trade, right? So that is it. I hope you got value out of it. Have a great week ahead.